Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate today's trading session with actionable strategies, sectoral trends and most importantly, your queries during the show. So please keep commenting on our feed. We'll have your questions addressed towards the latter part of the show. But before we kickstart, let's see what the global handover looks like. US Fed Chairman Jerome Powell says the central bank could slow the pace of its rate increases as early as this month, but cautions that inflation remains too high and policy could remain restrictive for a while until price stability is restored. Wall Street rallies with the tech-heavy Nasdaq gaining nearly 5%. European markets end on a positive note to finish a strong month as regional investors reacted to the inflation data coming in from the Eurozone in November. The Asia-Pacific opens up with a gap up. The SGX Nifty signals a positive start for the Indian market. Cement sector stocks have been firming up. What's in store for cement players after multi-year low margins in September quarter? Individual stocks in focus will be EasyTrip Planners, Indian Hotels, Likhita Infra and TVS Motor. First up, of course, Wall Street cheered after Fed Chairman Jerome Powell hinted at slowing down the pace of rate increases. Let's listen in to what the Fed Chair said last evening at the Brookings Institution.
Returning to monetary policy, my FOMC colleagues and I are strongly committed to restoring price stability. After our November meeting, we noted that we anticipated that ongoing rate increases will be appropriate in order to attain a policy stance that is sufficiently restrictive to move inflation down to 2% over time. Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level. It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy, and I'll close by saying that we will stay the course until the job is done.
Okay, let's get going and talk technicals with Hemen Kaparia joining us from KR Choksi Securities. Morning, Hemen, and thanks for taking time out. Let's talk about the start to December. The cues are all in place, very, very positive and healthy. Interesting commentary from Fed Chair as well. Asia Pacific doing extremely well, so clearly looks like it's going to be a good day for Indian markets as well.
A very good morning to you, Karunya. Thank you for having me on the show. Yes, I think you summed it up well. Everything's hunky dory. We have a slightly cool off coming in rate hikes. Our markets are at all-time highs, while the world markets are nowhere close to that. Everything is fine. The VIX is below 14, Karunya. So, well, there's a little bit of underperformance from the Bank Nifty, but then we've had the Nifty and the Bank Nifty playing musical chairs. Last time the Bank Nifty, a couple of weeks back, the Bank Nifty was leading. Now the Nifty is leading. IT as a sector looks good. Reliance is doing well. Reliance is itself, frankly speaking. So, like you mentioned, is firming up. So, everything seems absolutely fine. It's just that we've moved up one way. There aren't any known resistance levels. So things look just a wee bit overbought, but there is a lot of sector and stock specific action, Karunya. So in case there's a gap up, which is a possibility, then I wouldn't chase it if I were an intraday trader.
Okay, all right. Let's also put the spotlight on some stocks, individual names that could be reacting to some news flow. The first one I want to pick out is TVS Motor. Government of Singapore has bought about 0.5% stake in the company. They've acquired almost close to 25 lakh shares in TVS Motor Corp. In fact, integrated core strategies has in the meantime been selling, and they have hived off around close to 40 lakh shares of the company at 1,046.7 rupees a piece. The seller in the deal is integrated core strategies, buyer being Government of Singapore. Talk to us about TVS Motor Corp. Like several other auto OEMs, this one has also seen a very, very strong run for a significant part of this year, if not all. Given that it has retreated a tad from its 52-week high, does it provide a good entry point, or do you think one should wait for further downside perhaps, which could be in store, and then start accumulating?
Well, Koronia, frankly speaking, you answered your question yourself. I have a feeling, like you mentioned in the latter part, that one can wait just a wee bit. We've walked into an intermediate correction, Karunya. 7 weeks and counting. Yes, and like you mentioned, we've had a phenomenal move. Stock has moved from sub 600 to 1180 almost. And now we've walked into a corrective phase. So yes, if you have an extreme shorter term view, I think then one can take a contra trade, or maybe if you have an intraday point of view. But yeah, if you're positionally or investing, a bounce seems to be around the corner, but looking at the whole setup, I think I would reiterate what you said. I would prefer to wait a bit, spread it out. We've had a phenomenal move, little bit of time price retracement. Okay, yeah, the undercurrent is strong because we've taken 7 weeks, but it hasn't gone down much. But yes, I would wait just a wee bit. Levels sub 1,000 for from a slightly medium to longer term point of view, entry wise.
Okay, all right. In fact, if we talk about bulk deals, another interesting one is EasyTrip Planners. iShares Core Emerging Markets Mauritius has picked more than 1.1% stake in the company, lapping up close to 25 lakh shares at 63 rupees a piece. Now, EasyTrip has not seen an easy ride. At least the last couple of months have been extremely weak, volatile and concerning. If we look at, the chart of the last 1 month itself, more than 80% eroded. Talk to us about EasyTrip. How do you think it's likely to play out in the next couple of months?
Okay, Karnya. Firstly, we don't have too much of data to take a very long point of view. And yes, we are at all-time high, so we don't have any known resistance levels. But yes, we've taken 7 months, Karunya, for EasyMyTrip to sort of consolidate, move sideways, and then finally give a breakout. This was post, I believe, the split and bonus. So it shot through the roof, but after 7 months of a consolidation, the move on the upside or downside, either ways, would be quite dramatic, and that's what has happened. Currently, we are cooling off after this move from 48 to 73. So I would say there is a reality check. Sanity should prevail. A small consolidation period cannot be ruled out because it's given a very sharp up move. So yes, the picture is positive. It's in an uptrend on daily, weekly, monthly, whatever time frame you look at. So if I were to do anything fresh, I'd hold back a bit.
Okay, all right. Let's talk about Indian hotels as well. Again, fund action taking place on this counter. You have Government of Singapore again lapping up close to 0.7% stake in the company by buying 95 lakh shares. The seller in this transaction, again, Integrated Core Strategies, which has gotten rid of 1.4 crore shares. There's BNP Paribas Arbitrage, which has offloaded 71.9 lakh shares in the company as well. Now, Indian hotels consistently went up if you look at the trajectory June onwards, but off late, maybe last 4-5 weeks, looks like it's taken a bit of a breather. Now, is that just a temporary breather, or is the downtrend something that you see playing out in the near term?
Oh, I have a feeling it's more like a temporary breather that you've pointed out, Karunya. Well, like you said, if the stock goes from 60 to 350 almost, I guess that's a humongous multi-bagger. Normally, you expect a correction of a greater degree, especially in terms of time, if not in terms of price. And yes, for the last 13 weeks, this is the 13th week where Indian hotels hasn't gone anywhere. It's in a range between 305 on the downside and 347 on the upside. We've seen multiple attempts at a breakout on either side, which haven't fructified. So yes, we've cooled off. It's taking a breather. It's tired. And yes, I believe it's a breather within a bigger secular up move. So it could take some more time. And normally, even if, sorry to digress a bit, Karunya, but even if you look at Tata Power, I mean, if the stock multiplies, normally for a few months it consolidates. Sometimes it might take a year and a half also. But as of now, it just seems like a stock in an up move. 305, 347. If this has to resume, we need a weekly close about 347 now, Karunya.
Okay, all right. Now, the last name on our list is from the small cap universe, a name we rarely talk about, Likhita Infrastructure. Now, yesterday, this particular counter surged almost 17%. Now, what essentially happened or what changed for Likhita Infrastructure is the entry of an ace investor. Ashish Kacholia has bought 2% stake in the company by lapping up 4 lakh shares at 386 rupees a piece. The promoter of the company, Srinivasa Rao, has offloaded close to 4% stake at the same time. Himalaya Financial and Investment has bought close to 2 lakh shares again in Likhita Infrastructure. So a lot of action taking place and a big name entering into the counter looks like is what has spurred the buying as well. Hemant, talk to us about Likhita, and yes, it has seen a strong uptick yesterday, but in the next few weeks, how do you see this playing out? And today, I'm sure this is one stock that will be a big talking point in the market.
Absolutely, Karunya. Like you mentioned, if you have such a marquee investor, high-profile investor making an entry, picking up a percentage stake, that is bound to excite the markets, and we've seen that to some extent. A very interesting thing, Karunya. The all-time high in Likhita Infra was 480, posted in June 2021, and yesterday the high was 482. So almost after 1.5 years, it took 13 months to consolidate and correct, gave a breakout, and now we've come and tested this all-time high. So logic says it could cool off a bit because that's where you would expect resistance to come in from people who are stuck at that level. But yes, with a big name like this coming in, it might disregard the technical levels. But yes, once again, above 480, we don't have any known resistance levels. But I mean, this euphoria could last for a day or two. It's already moved from 385 to 485 yesterday in an intraday move. I would suggest I wouldn't suggest. I expect after today a small cool off to come in just to digest what has happened. Somewhere we've seen a runoff from 230 to 480 over the last 5 months, Karunya. So maybe somewhere this was built into the price. So yes, I would see how it behaves and takes out 480, but from a weekly point of view, Karunya.
Okay, all right. I mean, request you to stay on with us. I want to shift gears and talk about what's happening in the cement space, because that's where also we've seen a fair amount of action taking place on the upside. And clearly, cement sector, several of the cement sector stocks seem to be firming up. Rajesh Ravi, HDFC Securities, joins us to talk about this space. Rajesh, morning, and thank you for taking time out. Now, I want to understand what's triggering this buying, because September quarter earnings largely dismal, especially on the operating front for most of these companies. So what are the triggers in place that people seem to be betting on?
Yeah, hi Karunya. So as per my understanding, the Q2 number, there were two important observations. First is the demand front. The industry witnessed a healthy demand. 8 to 9% of growth is what the most of the listed companies aggregate have delivered, which in my view is a good number given that the inflationary pressure has been all around. Okay, so this has been picked up well by the investor community. Second, the costs have peaked out in Q2. Okay, after almost 6 to 7 quarters of steady increase in fuel prices, the industry is now witnessing post Q2. There is a tangible sight of cost reduction which is seen Q3 onwards, and even companies have been guiding that Q2 is a peak for the cost. So margins which fell off from a cliff, 2 years back, like as per our assessment in Q2, the aggregate industry average would be close to 530 rupees EBITDA per ton, which is one of the lowest in past many years. However, this did not disappoint the investment community and are looking forward for good numbers in Q3 and Q4. So while demand is holding on well, real estate is picking up, individual house construction is going on well, leave aside some blips here and there because of festives season and all. But overall, the demand momentum is quite healthy. And on the costing side, as I said, the industry is looking forward to reduction for next 2 quarters.
Can you talk to us about the valuation profile across the various players? Because while some of them continue to command a premium, the likes of Ultratech are still very cheaply or attractively valued. So talk to us about this aspect, and if you have any favorites within the sector which offer not only value but strong prospects going forward.
We, among the cement major companies, we strongly recommend Ultratech and Dalmia as two companies where the valuations are relatively comfortable, and these companies have strong balance sheet and are growing, both you can say aggressively in terms of continuously adding capacities to gain market share, and at the same time are prudent so that the balance sheet are not at all getting stretched because of their expansion spree. And in terms of the operating margins, they are also delivering very healthy margins. So these two companies, in my view, is well placed and should continue to get re-rated. And in the mid-sized companies, we like JK Lakshmi and Nuvoco Cements, which are primarily JK Lakshmi has a healthy balance sheet ongoing. They have repaired the balance sheet the last 2 to 3 years quite well. And with the new CEO at helm, the company is looking to improve their trade share mix while they are already very high on their green power consumption. So overall, margin profile for JK Lakshmi should improve, and the valuation is very cheap compared to peers because of the earlier history of execution delays, which we don't expect to happen in the ongoing Udaipur expansion. So net JK Lakshmi should be a continued re-rating candidate. In addition, if Nuvoco is able to repair its balance sheet, that is a strong franchise in the East market. Valuations at less than $100 is a very comfortable zone, and this stock should see re-rating.
Okay, all right. Thanks, Rajesh, for joining us and for highlighting the big tailwinds playing out in the cement space and your favorite picks within that. All right, back to technicals. Hemen, a lot of questions coming in your way. First, I want to address a host of queries that we have lined up on the IT space. Now, Divya is writing to us on Mastech for short-term to medium-term. Another viewer, Arun Srinivas, is writing if there's any suggestions on Zensar Technologies. He's been holding for a while now, and he has 100 shares at 315 rupees a piece, and asking if he can average that now because the stock has started to move up. In fact, IT index also is something that we're getting a lot of comments on. So if you could just take these one by one and talk to us about which mid-cap names look attractive right now and how's the index looking.
Okay, Karunya. I'll start with the Nifty IT index. I believe the Nasdaq has posted a medium-term bottom. It hasn't performed well, but I think, whenever the Nasdaq sneezes, we catch a cold. But yes, so that seems to have posted a medium-term bottom. We've staged a decent rally on the Nifty IT index from 26,189 approx to 30,500. That's where we've seen swing highs over the last few months. So the index could just stagnate a wee bit. The outlook is positive on the short and medium-term charts, no doubt about that. Stocks like Infosys have done well, followed by TCS. And I think many of the mid-cap IT stocks, I think Karunya have lagged, but now they're playing catch-up. I'd prefer not to comment on Zensar because I have a personal holding in the stock. Fair to say that there are stocks like Tech Mahindra, Emphasis. I think you said Mastech is some one of the readers has So yes, I think Tech Mahindra consolidation set for a breakout. So is the same with Birlasoft and Emphasis. Mastech, similar scenario. We've fallen off a cliff from 3,400 to 1,500. One, it's oversold. Two, there's positive divergence. Three, we posted a short term. No, I believe we posted a medium term bottom. So yes, there's very less to lose. 1,500 can be taken as a stop loss for positions. We are set to we are at 1,709 now, Karunya. I believe we are heading towards 1800 and maybe even 2000 over a period of time. So looks good, deeply oversold. And the mainline IT stocks might just stop a bit, but the mid caps will play catch up.
Okay, interesting. Thanks for that. Moving on to the next question. This is from Saurabh. He wants your view on Hoodco as it has finally come out from lower levels. So he's asking if he should buy at the current juncture or wait for correction. Now, of course, PSU stocks we all know have done phenomenally well. Hoodco, in fact, has been quite the star, almost 45% gains coming in the last 1 month. So talk to us about the 52, 53 levels where it's perched at. Right time to buy or wait for a dip?
Oh, well, it's finally woken up after multiple years, Karunya. High of 102, low of 18, and after that we've been consolidating for 2 years, and now we perked up. Firstly, supported 46, resistance at 58. The stock has just moved up from 35 to 55 in a matter of around 7 weeks or so, and we are walking into a virtual roadblock at 58. So one, do not go the whole hog at the first attempt. Spread your purchases if you like it. Expect it to pay its respects to 58 as a resistance level. Will that induce a correction of the greater degree? Maybe, but it will take a breather over there, and normally it would consolidate, and the markets are extremely ebullient. So I would say wait a bit. I would be more comfortable buying it below 50. If you do plan to buy now, you can do a small trade. I mean, if you're an investor, that's not advised. Maybe buy now, exit at 58, and then once again try to look at lower levels to buy.
Okay, all right. The next query is coming in from Kamalaja. They want your view on Lux Industries versus Dollar Industries and asking which of them looks better at the current price.
Okay, that's okay. Firstly, a dollar industries is in a correction of a greater degree. Most of the oscillators are on the sell mode on the longer term monthly charts. But it is relative. If I were to compare apples and oranges, dollar looks stronger than the other stock that you mentioned, Lux. So I would say, but it does not seem to offer any interesting technical setup as of now. Okay, oversold, yes, very strong support at 402. This is Dollar Industries. Doesn't look, frankly speaking, very interesting. Technically, no particular green shoots. Coming to Lux Industries, we've come up from 4,600 to 1,700. Once again, deeply oversold. Almost the same logic. This seems to offer a better risk-reward ratio. Once again, both of them don't look very exciting, except yes, Lux is even more deeply oversold than dollar. So I believe downside does appear limited. Levels need to be in place, but a bounce seems to be around the corner for Lux.
Okay, all right. Now the final query real quick for the day. Now this is coming in from Suryakant Mohapatra. He wants your advice on Gujarat Gas. This one has been very lackluster actually last several weeks now. Now what we understand is he has bought at 502 rupees and now that it's sub 500 levels, he's asking if he should book his losses and exit or should he wait?
Hold. With the stop loss of 475, breakout comes in at 528. Setup isn't bad. Hold with the levels in mind.
Okay, well, short and simple. There you have it. What about your own favorite picks in the market right now? Which stocks are you focusing on?
Okay, firstly, a buy call on Hindalco, Karunya. Metals has perked up. Hindalco is currently leading, so looks quite interesting. One can buy Hindalco at 450, which is almost the current close. Stop loss of 437, target of 476. Secondly, I would be remiss if I don't give a buy call from the IT sector. It has been a favorite for some time, has performed, and I believe the mid cap should. We spoke about it. A buy on Tech Mahindra has moved sideways for months now, on the verge of perking up. So buy Tech Mahindra at 1075, target of 1050. Stop loss of 1050, target of 1125. It's a modest target. I believe once a breakout comes in, it should get overshot. But yeah, buy on Tech Mahindra.
I want to circle back to metals. You had recommended Hindalco, but there's a lot of chatter about metals once again, starting to get ready for a breakout. Do you think that's possible? How likely is that? And is it the heavyweights which one should keep on their radar right now?
Superb observation, Karunya. You're absolutely right. If I look at the Nifty Metal Index, we are in an intermediate uptrend. But yes, I think we've seen a 10-12 trading session consolidation phase. And now we are at 6564. About 6600, we see a breakout. So I believe, yeah, one should go for the biggies, Hindalco or maybe a Tata Steel. But yes, metals does look interesting. I think the earlier guest mentioned cement. I think Ultratech is breaking out. So I think cement also should be on the radar.
Okay, great. Thank you so much, Hemant, for chatting with us today and sharing your thoughts, your observations on a host of stocks and the benchmark indices. With that, it's a wrap on Morning Trade. Thank you for tuning in.